Hello, chart watchers, and welcome to this Wednesday, May 15th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, as we take a look at the market today, we're seeing a continuing rebound. The Dow Jones Industrial Average currently up 147 points, the S&P 500 up nearly 20, the NASDAQ up 82 points, the Russell 2000 on a relative basis underperforming, but it is up 4 points off its earlier low. 10-year Treasury yield, after going down and challenging that 2.36% yield, is rebounding back and currently down just 3 basis points, 2.39%. Volatility index continues to move lower. I think this is a good sign for the market. The VIX is down about 7% today, leading to the upside. Communication services and technology, a couple of the aggressive groups, which we like to see. One group that is lagging, although it is just moved into positive territory, but the worst performer is financials. The XLF, you can see up just a couple of points or 2 cents today to 26.91. Among the industry groups that are leading, we've got internet stocks having a really strong day, printing a bullish engulfing candle off of this downtrend. I think that is a really nice short-term signal here for the internet group. Toys also for the second straight day having very, very strong day. I remember having Bruce Fraser on here talking about the toys group from a Wyckoffean perspective. And if we can get that breakout above 840, 850 zone, this is a group that's been consolidating for a while, could be ready to run, but we haven't yet gotten that breakout. Computer hardware and semiconductors in the technology group, these two areas have been hit particularly hard with all the discussions about the U.S.-China trade war. They are bouncing back nicely today, helping to lead technology. Two stocks in the news with earnings. Amdocs going in one direction to the upside with a better than expected report. Agilent, on the other hand, you can see moving lower with their earnings report, clearing this double bottom as they came up short of estimates. Okay, Erin, it is hump day, middle of the week. Market's been all over the place, but trying to continue its two-day recovery today.
Yes, exactly. You know, we've watched that VIX climb so high with those climactic readings. It's finally starting to settle down. We're seeing a little bit of a bounce right now. The only thing I'm watching, really, the main thing I should say that I'm watching is the declining tops trend line on the major indexes. I just want to see that broken through right now. We just haven't quite done that.
Yeah, the other thing I'm kind of watching too is the sentiment, you know, the volatility index, the CPCE, $CPCE, which is the equity only put call ratio. Both of those spiked quite a bit with all the selling, and they normally mark some pretty good bottoms, at least, you know, short term to intermediate term bottoms. So far they seem to be working again. We do have a special guest with us today. Chris Brecher is with us. And he's going to be talking IPOs. I know, Erin, we've had a lot of questions about IPOs and the fact we don't talk about them a whole lot. Well, Chris is going to change all that here on Market Watchers Live today. Chris, welcome to the show.
Thanks for having me. I'm excited to be on.
Yeah, it's very exciting to have you. And I know that, you know, you do look at these IPOs when they come out. And I think our audience is going to really enjoy your presentation in a bit.
Oh, thanks. Looking forward to it.
All right, hang around there with us. We're going to go through some technical news, go through the agenda and upcoming schedule and so forth, and then we'll get back to you in about 15 minutes. Erin, why don't you take it away?
Let's do it. Talking technically, our segment tomorrow will be on the MACD, so you'll want to come in for that. What's hot, what's not is Friday with Mary Ellen McGonigal. Tom, you got a workshop on Tuesday, and Larry Pesavento will be in on Wednesday. So it should be a pretty interesting week ahead. Today, of course, we did introduce our guest, Christopher Brecher. I'll be taking your questions for him in the chat room. 10 and 10, our first symbol is going to be Overstock.com, OSTK, and then we will finish off the program with Watch Your Stop. So let's go ahead and get started, Tom. Technical news and headlines.
Okay, first we'll start off with some economic reports. It's been pretty light on the economic front of late, but that was not the case this morning. As you can see on your screen, April retail sales came in well below expectations. April retail sales, less autos, came in much below expectations. Then we had the May Empire State Manufacturing Survey came out. That was higher than expected. But then right back to some bad news about 9:15, a little before the market opened. April industrial production and April capacity utilization both came in below expectations. March business inventories were flat relative to an expected 0.1% rise. And that was good news, actually, because if you recall, we had inventories building back at the end of the year into early 2019, but that seems to have dissipated now, and this reading certainly supports that. And then finally, May housing market index came in much better than expected, 66 versus 64. So the little good news there for the home construction group. All right, taking a look at the 10-year Treasury yield after all of this economic news, what's that doing? Well, we've actually come down here and we've put in a double bottom. Now, whether or not we hold and we execute back to the upside, we're going to need to go up and clear that 260 level to actually print this double bottom and confirm it as major support. So that'll be something to watch in the upcoming days and weeks. But this is an important area. And one thing that I'll mention and talk about in just a couple of minutes, financials relative to the S&P 500 tend to go a lot lower when this 10-year Treasury yield is in decline. And now that we've got this double bottom in place, I'll show you an interesting chart. But the XLF relative to the S&P 500 is nowhere near the bottom that it printed in March. So financials, at least, are beginning to trade as though the 10-year Treasury yield is going to rise. We'll see whether or not that's the case, but just wanted to point that out. All right, earnings reports, number of earnings reports still out there. And by the way, if you look at the bottom of your screen, Cisco and NetEase, two big stocks on the NASDAQ, will be reporting after the bell today. But the stocks that did report, Agilent Technologies was a big disappointment for the market. And I'll be honest, that one was a little bit of a surprise. I think when we take a look at what's been going on with the stock and how it's been performing on a relative basis, I think it was a little bit of a surprise that they came up short. But we'll talk about all that in just a moment. A couple of the cannabis stocks, Aurora Cannabis, we get a lot of questions about these companies. Tilray, both of them reported after the bell yesterday. They both came up short, but interesting move to the upside on Tilray in particular, or at least a possible test of a recent bottom. But we'll pull those charts up in just a moment. But I do want to start with the Agilent report. All right, let's take a quick glance here. Here is Agilent Technologies. Had a double bottom. You can see this move down, bounce, came back down, tested it. Looked like we were going to bounce back to the upside, but we did not. The thing that was a little surprising to me is that Agilent was a pretty good relative performer in the medical equipment space. Now, medical equipment took that tumble in April, and you can see relative to the S&P 500, it took a tumble, I should say. Actually, when you look, we had a little bit of a decline here, but on a relative basis, it was even steeper. We're starting to recover out of it, but you can see quite a bit below. So money had been rotating away from the medical equipment space over the past 6-7 weeks. And but Agilent overall, I think it held up pretty well until the earnings report today. So I think this came as a bit of a shock for a lot of folks that have been tracking the stock. And that's something to continue to watch to see whether or not we can get a recovery off of this. So far, not so much. Agilent missed on its top line and also missed on its bottom line. Let's pull up ACB. This is Aurora Cannabis. Now, Aurora missed on the top line. They missed on the bottom line. Stock gap down, but has actually recovered and is currently higher today, despite missing its estimates. Could be a signal that we're at a bottom. And if I annotate this quickly, you will see that it is at gap support that it went down to today. So a gap lower, hitting a pretty big gap support level. Look at all the volume here that came in on this gap back in March. So we went back, filled the gap, and have now gone down there twice, and it looks like this is a stock that's trying to reverse back up. Let's see if we can get through the moving averages, but I do like the way the stock is reacting to some negative news. Also in this space, Tilray, and this one I think actually was down, at least earlier when I was looking, it was down. But I actually think that this is a stock that is bottoming. Let's pull it up. Now, you might look at it and say, well, what the heck is bottoming here? We just keep moving lower. It's been in this downtrend. Well, a couple of things. The relative strength certainly has not been good, but medical supplies has started to turn around. So at least it's in an area of the market where we're seeing some strength. And if I go out and I'll move away from this relative chart for a minute, I'm going to show you the PPO. As we have been moving lower in the stock, look at the PPO actually turning back to the upside. This is telling me, and with bad news today, by the way, we beat on the top line, but missed on the bottom line. With that mixed report, we gapped up this morning and then went back down. But I actually think this could be, as long as we hold 45 on a closing basis, I believe we could be getting a bottom here in Tilray. Last 2 solid days with heavier volume, both of which hollow candles. I think this is a stock that is starting to be accumulated. And as long as we hold this 45, today's big volume, we don't want to lose 45 on the close today. But if we start to see some buyers come in this afternoon, I think that could be a good sign. A close above the 20 would suggest a 50-day test, which is at 58.75. That would probably be about a 22, 23% move from where we are currently. So I like the reward to risk here on this stock, even though it's been downtrending and has not been performing well on a relative basis. I mentioned the toys at the start. So let me bring this up here first. And I'm going to stretch this chart out a little bit. Go back to a year. And again, this is an area of the market that I specifically asked Bruce Fraser when he was on off of this downtrend. You can see the move here back up to test this 840, 850 area. Look at the volume. And then as we came back up again in March, volume picks up. Seems like every time we move lower, the volume is lighter. And when we start to strengthen like we did yesterday, the volume starts to pick back up again. I think this is a sign of accumulation while we are in this sideways consolidation, but we need confirmation. And I think that confirmation would be a close back above 850. So toys strengthening last 2 days, still has some work to do. The XLF versus the S&P 500. I wanted to bring this up as well. And of course, I like to use this on a relative or a line chart. And let's see here. But remember, the 10-year Treasury yield bottomed in March. Let me add one thing here to this chart. I think we'll make it a little clearer. If we bring up the 10-year Treasury yield. What we're going to see here is that I think it's pretty clear that there's a correlation between the direction of the 10-year Treasury yield, interest rates in general, and the direction of the XLF on a relative basis versus the S&P 500. Now, this whole, and when you line it up, it's not perfect. We see some various things. I actually saw some nice relative strength in financials back in December and January, and yet overall we were still moving lower in the 10-year Treasury yield. And then finally, the relative strength of financials rolled over. So it's possible that we continue to roll lower here versus financials. But I just wanted to mention that if the 10-year Treasury yield can hold this area of yield support down around 2.36%, I think that would be very bullish because we are already starting to see some outperformance by financials. And if the 10-year Treasury yield were to bottom from here and start moving higher, I think this would set up financials maybe to help lead the market in the summer when technology and some other areas of the market don't do quite as well on a relative basis. So might see the financials starting to fill a void on a relative basis. So just something to keep in mind and watch here. All right, a couple of companies that will be reporting after the bell today. Cisco, I wanted to bring this one up. Actually, let's just show this on a relative chart. I wanted to bring this up because you might look at it and say, well, it's performing really poorly into its earnings. That's not a good sign. Well, that's only half the story. First of all, telecommunications equipment companies have been really under pressure for the last 4 weeks. Cisco, relative to that group, is actually trading at a new high. So yes, Cisco's been under pressure and moving lower, but of the money that remains in the group, money's been rotating out of the group, but of the money that remains, Cisco's been seeing more than its fair share. So I'm still holding out hope that we get a decent report out of Cisco. I really like a lot of these hollow candles, even though we've been moving lower. 5 of the last 6 days, we've closed above the open. So I think there's some accumulation still taking place in Cisco. I wouldn't write this one off just yet. Last one, NetEase. Now this one looks better on a relative or on a absolute basis, breaking out recently to new highs. But it's actually been struggling relative to the internet group. We're having another good strong day on internet stocks, and NetEase is actually down relative to its peers. So you can see it's flat on the day, and internet stocks having a good day. So I'm not quite so sure about these two stocks. NetEase might appear to be the better stock, but I actually think Cisco might get the better report. We'll have to wait and see. Erin, upgrades, downgrades, what do you have for today?
All righty. It's starting to get a little bit more slim as far as how many are getting upgraded and downgraded, but I have a handful for you today. The first one is Applied Materials, AMAT. This one, Susquehanna upgraded it from neutral to positive, and they've moved their target from $34 all the way up to $60. So they're really expecting some good performance to come out of this breakout and a move higher on the upgrade. You know, I think the chart is looking pretty good. You have a very short-term declining tops trend line, a declining trend. Yesterday, it managed to poke up there right above that, closed right on it, and now today we're trading completely above that declining tops trend line, and you can see we've already started to penetrate the 50-day EMA, and the 20 is getting ready to show up here as overhead resistance. But I think the chart looks fairly good. I'm not really thrilled with the way the OBV has been acting. A lot of negative volume, a lot of selling going on. And I'd like to see a really nice pop here if this is going to end up being a nice short-term bottom. But certainly looks like on the upgrade, Susquehanna is pretty excited about AMAT. All right, HES, Hess Corp. Capital One has upgraded this from an underweight to an equal weight. I think this one is starting to look pretty good. It is in that energy category, and I just would be a little careful because I know that we're not seeing the kind of performance we want out of the energy sector. So you'll want to keep an eye on this if you do want to get it on the upgrade. Notice a little bit different on the OBV, moving sideways, not in decline. You can see we're probably about ready to break above the declining tops on the OBV. Scooter has now moved into the hot zone, and as you can see, the PMO is starting to make its way back up. Really nice cup shape forming here. May have to have a little handle before we can continue to the upside, but I think this chart, Hess, is actually shaping up pretty well, considering it's in a group that's just not performing so well. All right, ST Microelectronics, STM, was upgraded today by Kepler from a hold to a buy. Right now, I would look at this area of short-term overhead resistance. You can see that top we got back here in February. That's where trading is currently being held up. You can see that big gap in the thumbnail. It's not quite as visible on the big chart, which is why I like my thumbnail. We got that gap down. Looks like now there's that, you can barely see it here, but that OHLC bar looks almost textbook for a reverse island formation. Came down, gap down, and then reversed on the gap back up. I would be watching to see if this gap can get closed. We've made it above the 20-day EMA. PMO is turning up. Scooter now is in the hot zone. Like I said, after a really big day of selling, though, I just would like to see more positive volume come in behind that. Tilray, which I know you were talking about earlier, Tom, that one was upgraded today. BMO Capital upgraded it from an underperform to a market perform. I wanted to look at, I'm looking at the picture a little bit longer term here. And this, the first thing that comes to mind, and I know we were all talking about this stock when it came out and the moves it was making to the upside so quickly. This is textbook as far as a parabolic. And once you get that breakdown, it is hard, heavy, and fast. And you generally are going to move your way down quickly to an area of consolidation. And it looked like you saw that earlier when it came out, there was that support / resistance, a little bit of trading back here. But it looks like the actual zone, the typical trading zone, is between about 60 and 100. And we're getting ready to hit some important support at 40. And I agree with you, Tom. I think it's starting to look pretty good here. But personally, this is just an area that is a little too volatile for me. I mean, we're down 4.33% today on an upgrade. So I personally would stay away from these. But if that's the kind of risk you like to take with some of your money, it's not looking too bad. All right, let's move to some downgrades. EGHT 8x8 was downgraded by Doherty and Company from a buy to a neutral. Not much to say here. PMO is on the sell signal. Of course, a big drop today, over 5%, and it has hit 50-day EMA support, but I would be looking at stronger support that would lie right around here at 20.50 or 21. So I would expect that one to continue lower. And finally, One Main Holdings was downgraded today by Wedbush, and they moved it from an outperform to a neutral. They have lowered their target from $40 to $35. So yes, they're in a neutral position. They're expecting to see some more consolidation sideways more than likely. PMO on the sell signal, still positive. OBV, meh, moving sideways. This I don't like. The scooter is starting to turn down and has moved out of that hot zone that I like to call. All right, that's it for our upgrades, downgrades. Here is the list of what we went over. Went a little long. I apologize, Chris. But let's go ahead and bring you in. I will have that summary slide up there in the Market Watchers recap if you want to look at the rest of those charts more closely. All right.
All right.
Welcome
you ready
back.
for me?
Yes.
All right. Just to let you know, I'm Chris Brecher with Brecher Trading. I go through a lot of different kinds of ways to trade. I've been trading for 38 years. So I was an option market maker on the CBOE for 8 years. So a lot of people know me for like doing hyper, very short-term trades. But I trade up to, 6-month long trades. And I wanted to show you about IPOs. As you could go to YouTube. There's hardly anybody mentions IPOs and how to trade them. And there are 3 ways I wanted to show you how to trade them. The one thing I want you to realize is this. Number one, this is the amount of IPOs, and that this is from 2 weeks ago. And there were a lot of IPOs. 16 IPOs all at once is a lot. Number two, when you get that many IPOs, that's usually a bearish sign. What's funny is I thought you'd like is look what came out the same day all the IPOs got issued. Major Wall Street banks are telling clients to be ready for a melt-up. A lot of times you get that kind of talk at the same time as IPOs. You got the same thing in 1999 and 2014, which I'll go over in a minute. So the first thing I wanted to show you is why IPOs are bad for the broad equity markets. I don't mean today. I mean the NASDAQ's up like 8 million today. But I'm talking about there was a time to short the markets a couple of weeks ago. And I want to show you what indicators I use. And I like to have 3 reasons to do a trade. And only one to get out when I'm wrong or when I exit a profitable position. But I need 3 to do a trade. But the first thing I want you to realize is IPOs by themselves are fine for the equity market. But the problem is 16 IPOs in 10 days takes away a lot of buying power from investors. That's why you've seen the FANG stocks underperforming for the last 2 or 3 weeks, because for 2 reasons. One is when people buy IPOs, that's like the fast money. So what they're doing is they're buying them thinking they can flip them or trade them. And that's the fast money. There's also other people that buy IPOs, and the brokerage firms, if they let you participate in an IPO, they encourage you to stay in 30 to 60 days, or they won't let you have a lot of the next IPO. So what happens is it takes away a lot of people's buying power. Now, what also happens is the fast money traders see that the IPOs are moving. And I'll show you examples where they're moving tremendous, like Beyond Meat. And because of that, they're not trading the Apples and the Amazons the way they did even 2 months ago. So what happens is you take away a lot of the buying pressure that you would get in a lot of other stocks because there's a lot of stocks dumped on the market all at once. The other thing is, you got to feel this way. If corporate officers are all rushing to sell the stock, that maybe they think there's a top, because companies aren't going to be selling at the bottom. They want to sell when it's the right time, where it just feels ripe to be able to then cash in. So a lot of people were worried about that. But what everybody misses is that doesn't mean we have to go down. What it means is bearish macro developments are more likely to hit the market. They're more likely to hurt the equity market because you already have some change in sentiment because people think corporate insiders know something. And number two, you have a lot of the buying power sort of sucked out of the market, so to speak. So what I found in there is if you combine that with charts and you combine that with obviously the Chinese tariff news, it can affect the market more than it should. That's why I think we're going up today. The IPOs are already out. So in fact, a lot of the market started bottoming the second Uber priced on Friday. So I'll go back and show you some of my PowerPoint, but I want to show you what I'm talking about. Now, we know the markets got hit on Friday, but you're also going to see the markets rallied on Friday. And what you're going to notice is that Uber was selling off. They were reducing the offering price. And the second it opened, the ESs started rallying, almost like sell on rumor, buy on news. Everybody knew it was going to be a disaster. So let me go take you to Friday afternoon. So we know Friday had a miraculous rally. You were down about 40 points on the ESs. Trying to get it up here so you see it. Right there. It's amazing. Look what time Uber opened. And look what time the broad market started rallying. That's just a beautiful thing. So, and that's what happened. Everybody sort of breathed a sigh of relief. All the IPOs are gone. Now, obviously, we had another sell-off on Monday, and we'll go over later what I think is going to happen with the market. But I just wanted to show you that dumping a lot of IPOs at one time can start to sit on the market. Now, the other thing I wanted to show you in here was trading IPOs. And what I've seen in here is IPOs open according to market conditions. So if Uber has an IPO that's priced at 45, that's what the company gets. But that doesn't mean it's going to open there on a trading market. It opens then according to supply and demand. The syndicate is composed of all the people that helped price the IPO. They were worried it was going to collapse. So believe it or not, what they do is they do a thing called a green shoe. This is an amazing thing. They can sell, the syndicate, more stock to the public than how much stock is getting actually issued. This way they create a short position. They do that because they're allowed to support the stock if they want. So then they can short up to 15% of the issue. Well, this time, though, there's a thing called a nuclear option that was in their prospectus where Morgan Stanley could short a lot more than 15%. They could have a massive short position because they were worried the stock would plummet and they could buy it back and help the market. Yeah, no, that's not what happened. What happened is they knew it would collapse. They have a massive short position and made a fortune. So I'm sorry to say that, but that's what happened. But theoretically, they do that so they could support the price. So they didn't support 45. It was overwhelmed, but they cleaned up on the way down. It's an amazing story. If you could go online, you'll see about Uber nuclear option with Morgan Stanley, and there it is. So the point is, when they can't support the stock, that price becomes big old resistance. It's a wonderful shorting opportunity. Now, I'm only showing you IPOs, but it also works with secondaries. Today, I was short Twinkies, Hostess brands. So Morgan Stanley, JP Morgan, on May 9th, upgraded the stock. In fact, I'll just show you real quick because I think it's fascinating. So Morgan Stanley upgraded the Twinkies right here, made it their Focus One stock right here. Well, yesterday they announced that they're selling 8 million shares for insiders. Guess who's handling the deal? JP Morgan. So what happens is the deal was priced at $13.40. That means that there's resistance at $13.40. In fact, 8 million shares that people are stuck at $18.40. So under $18.40, it's a great short. Now, this is only a $13 stock, but it'll work for a $100 stock if you see it on an IPO or a secondary. It's an amazing thing. So it's just fascinating on how that works. go back to Uber and go back to support and resistance in Uber, and it's an amazing thing. Look where it opened, right at 45. In fact, I'm going to try to go back a little. I use this thing on Thinkorswim called On Demand. Now, I'm using Thinkorswim, and I'll show you my indicators, but it's the same indicators that Tom and Erin use on StockCharts. The other thing is StockCharts has a thing coming out called, let me get it in front of me.
ACP.
ACP. It erased on the bottom here, so sorry about that. But ACP is a really cool thing, really interactive. Now, I use a thing called the ATR trailing stop, and StockCharts uses chandelier exit. Same thing. It's just not on ACP yet. So in here, this is really cool how it works, but it just started. So I'm going to use Thinkorswim for today. But what I wanted to show you was Uber a couple of days ago. So when you go, all this is doing is going back to a couple of days ago. I wish it went to October 2019. That would be pretty beneficial. But if you go into Uber and you're going to see when it broke 45 and then tried to bounce, that becomes wonderful shorting opportunity because it has a massive amount of resistance at that price. So that was on May 10th on my birthday. So let's go back to that day and I'll show you. There. And now I'm going to put a 1 minute chart. So as I'm showing you this, I want to show you a couple of other things that I think are tools of the trade. So I use the same thing, like I said, that Tom and Erin use. I use the 9 EMA. I add that in there. I don't usually see that. But the 20 SMA, the 50 SMA, and the 200. I also use a 9 exponential for short-term trading. So all I'm doing is taking the most basic, simple indicators because I found that the more basic, the more people follow them. So that's all I'm doing. And you'll find that computer algorithms are ridiculously simple. They use moving average crosses. They use really simple stuff. So that's all I use. You don't have to use expensive indicators. Just use what StockCharts gives you. It's great. The other is, like I said, I use the ATR trailing stop, and I use a 9 and a 2.9. And then I use as my oscillator. Everybody uses an oscillator. I use a 310-16 MACD. You can use a stochastic, an RSI, any of them. We look for support. We look for negative and positive divergence, overbought, oversold. And I also look at resistance and support. So I try to combine them all. So what do you notice about Uber in here? There's the offer, 45. Everybody's stuck at 45. If you're trading at ultra short term, how do you trade an Uber? Well, this is, as you see, nothing. You don't see anything to do yet. It hasn't crossed anything. You certainly don't want to buy it because it's under its IPO price. Now, fast forward about 3 hours. There you go. So this is why I showed you the indicators I use. If you were shorting Uber, that's a low risk entry point at 44.80 because you know you could stop yourself where everybody's stuck. But let's say you didn't do that. Let's say you want to short on the way down. Then you sell right there. You sell when it breaks the ATR trailing stop. This is where it gets to be a little bit of an art because as you see, it's oversold on the bottom. So the next step is this. I usually wait for the first oversold rally. And as you see, even if you shorted there, see the oversold rally? Well, that thing just kept going and going. If you go to the end of the day, so we'll go to 16:39 Eastern. So this is after the close. Look how much you would have made. Let me see if I can get it to work. If not, it went down a lot. Let's just put it that way. Yeah, it worked. Great. There. Look at that. So there were 2 ways to play it. 3 ways, actually. Number 1, you could short when it got above that. I mean, when it was there, because you had very little stop. I love stops. So you knew where to stop yourself. Number 2 is when it crossed there. Number 3 is if it works off the oversold poorly, which it did. It stayed under that red line. And the fourth one, let's say you got out right here, you only made $1. Well, then you see this thing we call a Brecher ledge, which is basically a bear flag with a horizontal bottom. This is how the algorithms target. They target the low. So the second it made that low, it just absolutely fell apart. And that was good for about 2 points in the next 30 minutes. So that was exciting. That's on the short side. Now let me show you some of the long ideas. So the first thing you got to understand, if a stock breaks under its IPO, you look to short it and use that as a backstop. On the other hand, there's stocks that get above their IPO. So I'm going to give you 2 examples. I'll start with a cheapie. So the first cheapie I want to show you is this stock, PBTS. Their IPO was at $5. So you always wait. You don't chase the opening. My goodness, it's a good way to get yourself really hurt. What I do is I wait for a definable chart pattern over $5. That's the IPO. That's my backstop. Well, you can see the definable chart patterns. There's a bull flag there. There's a bull flag there. There's a bull flag there. And every one of those, it stayed over the ATR trailing stop. That's a beautiful thing. So then the next thing you might say, well, where do you get out? I do a thing called a dark cloud cover. Now, it became a bearish engulfing, but when I see a red candle take back half a green candle on a short-term basis, I'm usually out. Or you could have gotten out at the ATR trailing stop. But that's from 540. You're making 50%. That's pretty exciting. So I just want to show you how that worked. That's one way. Now let's go to the real big one, the meat of the charts. No pun intended with Beyond Meat. But watch this in here. This is fascinating. Number one, this stock has been in an uptrend ever since its IPO. Every single time that this stock is in an uptrend, and what I mean, it's over its 9 EMA. It wasn't all the time, but every time it reclaims it, every short-term bullish pattern has exploded. But I wanted to show you what it did on the exact opening the day of its IPO, because you can make money on this. As long as you don't mind short-term trading, all you have to do is you have to have your stops in place. On a stock that's very, very liquid, Beyond was trading millions of shares. I usually use a tick chart on the opening, on the exact opening of the secondary of the IPO. When you do that, it becomes a whole different kind of look than a 1-minute chart. Look at that. So right here, I just want to show you this. That's at 12:19 on May 2nd. So now we're going to go to 12:15 on May 2nd. We can even go to 12:40. This is what I want you to see. If I could get it to pre-buffer, give me a second for it to work. As you see, it needs to build the chart, so to speak. But the point is, you don't buy on the opening. You just don't. That's very dangerous. What you want to do is buy when it makes a new high. See on how it's already over its ATR trailing stop. If you buy right there, you know where to stop yourself at the low at 45. So you're buying at 46. Yep, you're buying on the way up. But as you see, you would have stayed in all the way to 60. So that's just an amazing thing. So what happens is go to as short a time frame as you can. That's what I do. Now, fast forward to today and go and check out what's going on, which I think is really cool. You go into Beyond and you go to a 1-minute chart. So you go to the left and you look at an hourly chart and you see that the ATR trailing stop, that's usually my definition of an uptrend or a downtrend. Now, on a short-term basis, is looking at, let's say, a 15 or an hourly chart. A daily, it's already in a monster uptrend. Now, when you look at an hourly, I think you'll see it a mile away. You could see the bull flag developing. You can see that. A lot of people bought on the way down. Don't do that. Buy with the bull flag developing. So go to that time, which is going to be Monday at, let's see, at 3 o'clock. Now, check this out because this is pretty exciting too. Monday at 3 o'clock, look at this. This is another thing about IPOs that I see all the time. You could see a bull flag, but I like when it breaks. So it was a better buy Monday afternoon over 72. So actually that was on Tuesday. It's not showing scale right. It was a better buy over 72 than 68 because you didn't know if it would go to here. That's an exciting thing. And as you see, it rode the ATR trailing stop for a while. That's last Monday. Sorry. So now fast forward to in here. Go to today. This is so cool. Go into here and put Beyond Meat in here. And look at Monday. Made a new high. Yep, even on Monday, when we went down, the stock exploded. A lot of us were buying it here and selling it at 72. If you go to a shorter term chart, you'll see why. Let me be sure I get the scale right. Because of that, well, that's today. Because of this one. Because of that move, that symmetrical move, all they are is bull flags. So when we see bull flags, we just jump on the bull flags. Let me get specifically in here. Right here. So you had the little bull flag, and we took profits in here. Just little bull flags. Little 3 points, 3 points. Now fast forward to today and check this out. Look at the bull flags on the way up. That was from yesterday. So I told you about the 72 exploding. If you missed the opening, which is fine, these stocks move so much that this is why people aren't trading Amazon. I mean, Amazon's up 21 today with the NASDAQ up 80. That's like it being down. I mean, this stock's up 8, up 11%. Bull flag, and that's from Tuesday. Now check this out. We went down this morning, and look what we formed. A little inverse head and shoulders. That's just so exciting. And the stock just exploded on you all day. So very exciting. So that's how I trade like the Beyonds. Now, the last thing I wanted to show you is how to short longer term. Not buy longer term, but short longer term. And I hope I'm not running over. I don't think I am. So I hope this is okay.
No, you're fine. You're fine right now, Chris.
Oh, great. All right. The other thing that I do is I like to short these after 3 months. Now, I combine chart patterns, but I want to show you what I mean. Is after 6 months, insiders can sell the stock. So what that means, it's called an insider lockup expiration. So the more stock that has been locked up that wasn't issued to the public, the more that can be dumped in the broad market after 6 months. That's exactly why Tilray, we were shorting it all the way down. Let me show you what we're talking about. This is Tilray. Believe it or not, what happens is traders start positioning for the insider lockup after 6 months. They start positioning 3 months before the lockup. I've seen it a million times. Go and check out Tilray. The insider lockup was July 9th. The IPO was July 19th. Guess when it started going down? In September. Started a little early, a little wick, a negative wick there for sure. But the way we trade it is not to try to pick a top. We wait for these kind of trend lines. They are so reliable. So if you look, that's exactly 3 months after the IPO. See the trend line I drew in? 3 months. That went from 140 to the insider lockup, which was 6 months, is January 1st. You're out at 70. So it's just amazing how that works. Usually what happens is stocks start selling off 3 months before the insider lockup. Then the insider lockup, there's like a crescendo in volume. And usually then it takes a while to bottom. And that's what we've seen in Tilray. Let me give you another one that worked great, is Twilio. So Twilio, exactly 3 months. In fact, I did an article for Investors Daily that just happened to come out that day. That's just lucky. But that was exactly 3 months. So a lot of times what we do is we don't short after 3 months. We short when we have 3 reasons. So what we did is we looked for the trend line break. That, just like Tilray. Did I miss the first 14 points? I sure did. But we had the direction was then known. And then we made the next 20 points, 30 points. And as you see, the stock sat forever. Now, just to let you know, longer term, look at that. It took that long for it to work off all the damage from the insider lockups. The second it reclaimed that 35, just this rectangle, the stock's been a monster ever since. So don't think just after 6 months you buy it. You got to wait for it to repair its damage and to form some good structure of a chart. So a lot of these stocks I'm going to be eyeing that have insider lockup expirations coming. So what I do is I go to a thing called IPO Scoop. It's free. I love free, except for my site, but I love IPO Scoop. So all I do in here is I go through the last 100 IPOs. All you do is go to IPO Scoop and look at the last 100. And then I go through the ones that were issued around December, even a little later, and see what's going on after 3 months prior to their insider lockup. And I usually like the hot issues. So you have like Silk Road. That's, though, is April. It's not time yet, so it could still go straight up. You got Lyft. You got Levi Strauss. You got a lot of these. And if I see them start to break down, I'm going to short them. But you got to wait for that trend line break. And we just don't have that yet. But that's what I'm watching. So those are the kind of things I'm watching. Now, when it comes to what's going on now with the market, you might say, well, you said we're going down. I showed you the trend lines in the ES. In Tilray. I showed you the trend lines in Twilio. This is when we got short. Not on the way up because we're opinionated. We got short when you could draw the lines. Usually we do 3 strikes, you're out. If you see 3 lines that you couldn't draw as point of contact. So did we short right there? No, we waited for us to work off the oversold condition. So we weren't in for that. We were in for that. So we made that quick right here, about 25, 30 points in about 5 hours. Now you might say, well, are we going down now? And my thing is I combine a lot of different indicators. And number one is sentiment. And I'm seeing the sentiment too negative. Now, you might ask what I'm meaning by that. I do a thing called the StockTwits sentiment table every week. So StockTwits has a sentiment they show in ETFs using their algorithms, however they use them. And what you're going to see in StockTwits is before the IPOs, the sentiment was really bullish. Now the sentiment's really getting bearish. Usually the SPY, which is the most active ETF they follow, usually under 50% bullish. That's a warning tell not to short when you're oversold. That's number one. Number two is the ES itself is oversold. So I'm watching both of those. Usually I want to see how we work off the oversold condition in the markets. And are we going to work them off by forming like a bear flag? So you have to work off this, and you have to work off the bearish sentiment going on in the broad markets. And so I want to see in the next week or two how we work off the bearish sentiment. It could take a week. So I have no problem being patient. So that's what I'm doing. We shorted in here when we were worried about the IPOs. When we had any bounces, we looked to buy the IPOs that acted great. And we looked to short the broad market if we had our triggers. So that's what I've been doing. So I hope that helps. I hope you like the idea of the short-term shorts in IPOs, short-term longs, and the long-term ideas of short ideas, like Twilio.
Okay, first of all, great presentation, Chris. I can tell you, I haven't been somebody who has traded IPOs when they first come out. I think you've presented some great arguments on how you certainly could set up some nice reward to risk trades doing that. But like any trade, you want to make sure you have your stops in place. So very, very good presentation. I do want to remind everybody, I have some questions here for Chris. We're going to go over in just a minute. But I do want to remind everybody that we're running a poll, and I would really love to hear how everyone out there trades these IPOs. So it's just a matter of how long do you typically wait after an IPO? Do you trade it immediately when it comes out? Or do you wait a week, a month, 3 months, 6 to 12 months, or more than a year? And so if you'll fill that out, I'm going to have Chris, I want to go over those poll results with Chris and Erin here in just a couple minutes. But before we get to that, there are some questions. One, you had mentioned earlier about syndicates. And one question that came in, it said, how long can the syndicate manipulate the IPO? In other words, how long should I wait before considering an IPO? And I think you may have answered that a little bit later in your presentation, but what are your thoughts there?
Yeah, that's a good question. I don't know the rules of how long they can manipulate, but let me show you what we're talking about because it's a great question. Like Twinkie today, I know it's Hostess brand, but it's TWNK, and I always think of it as Twinkie. So I don't know. Once it broke the syndicate price, you always wonder, is the syndicate giving up? And all I know is there's a lot of people stuck at 1340. Of what I've seen, it's usually only 1 or 2 days that they're usually gone by then. They usually have washed out their position, but I don't know. Like tomorrow, let's say the syndicate bought a ton of stock at 1340 and it gaps up to 1350. You got to think the syndicate is getting out of what they had to buy. So I would think it's a week or two. Usually, let me give you for instance, Yeti did a big old secondary. They were an IPO back here. In fact, this is one of those 3-month rules where Yeti could actually, go down for the next couple of months. But they did an IPO at 38, a secondary at 28.50. And it's just, as you see, it's just been blah for 7 days. And every time it starts to get hit, it miraculously comes back, even on Monday. So I'm thinking the syndicate is still sort of out there. You can sort of feel that when it has a bear flag and it's not working, that maybe the syndicate is out there still messing around. But I got to think they're only there a week or two.
Yep. I will also add, too, with that Twinkie discussion, I always wait for the gap to fill for Twinkie. That was a pun.
Oh, that's a good one. We do those on my side all the time. Most people go crazy with them. So I try to refrain from too many during the day. So that was a good one.
Sorry, I couldn't resist. All right, another question. With regard to the ATR, the average true range, what do you use as your stop, or what are you looking at on the ATR? Is it a one-time ATR?
Oh, it's the ATR trailing stop, so it's different. It's based on the average true range, and that's why if a stock goes bonkers like Twinkie, when it went straight up, you'll see the average true range went up, so the trailing stop is farther away. So you got to use something else, either a shorter time frame or like the 20 SMA. But I use a 9 and a 2.9, but this is how I usually do it. I usually take 6 grids, and I use the ATR trailing stop on multiple grids. So like Apple, let's say you wanted to shorter buy Apple today. So it's in a downtrend on a daily. I'm just going on the red line, the ATR trailing stop. So it's on a downtrend here. This is where it gets rough because it's over it there. It's over it there. It's over it there, but it's under here. So if you're an ultra short-term trader, you can mess around with like a 2 or 1 minute ATR trailing stop. If you're thinking of finally getting back in Apple, my personal opinion, because Apple has been amazing stock long-term with the ATR trailing stop, you short it when it's under here and sell every rally. And you buy it here when it gets back above it. It's been an amazing stock to so many people watching. So to me, technically right now it's in a downtrend. The problem is it's oversold in a downtrend. A lot of stocks are like that. So I'm waiting to see how they work off their oversold condition before I jump on the short side again.
Makes sense. All right, a couple other questions. Number one, because these IPOs are so volatile, do you have any problems holding them overnight? You get into a position, looks really good, you're holding it. Are you worried about the next morning?
Absolutely. I mean, I've been doing it 39 years. I'm still respect the market every day, day in and day out. That's why I put in stops. You might be like, oh, so much, you don't need stops. My goodness, you need stops. Usually in a choppy market, I will not stay in overnight. So if there's 16 IPOs, I'm much less likely to stay in overnight, even if the stock looks good. And as you see, believe it or not, you go into Beyond Meat, and almost every single day it opened down. Every single day, it's uncanny. This one opened up a little, but you didn't. It sold off on the close. So because they move so much, you can initiate after the opening and not have to be worried overnight. I mean, my goodness, that day when the ESs were down 48 points before the opening, if you were in it, you probably would have had more of an emotional attachment than if you would have just bought it when it made a new high. So when you have this many IPOs, I usually don't stay in overnight. Now, there is a different side to this. When you take a small stock like I showed you, and you take this stock, there's a quiet period, PBTS. So what happens is the company can't comment on their earnings, and analysts can't upgrade or downgrade. So a smaller stock like this, sure, you could, if it closed right here, it's not going to be affected as much by broad market movements because it's a cheapie. So you're more likely you could stay in overnight. So that's how I look at it.
Okay. Well, why don't we go ahead and pull that poll up, and we'll take a look at what's going on there. And while we're looking at this, maybe one final question for you, Chris, and that is liquidity. You mentioned liquidity earlier, and you said that, I forget which stock you were talking about, but you said, liquidity wasn't a problem. Millions of shares were trading. What becomes a problem in your mind in terms of liquidity? Is there an average number of shares per day?
No, that's a great question. Well, Beyond, Uber, all those are doing great. But the way I did it is I took all the IPOs for, let's say, a week ago. So I went to IPO this week. And if I see them 70,000, 56,000, I just take them off. So now on the opening, you knew Uber was going to be big. You knew Lyft would be big, Beyond Meat. So I just sort them. And usually I just throw these away because you want to make money trading, and you can't scale these because look at the bid and ask on this one, 1683 to 1710. You can't put a stop in. It's just too dangerous.
Hey, Chris,
so I usually, if it's under 100,000, I get rid of them.
I'm sorry. We couldn't see your screen because we have the poll up. I just wanted to let you know.
Oh, sorry. Do you want me to reshare?
No.
All right. Usually if a stock has less than a couple of 100,000 shares volume on the second day, if it doesn't do volume by then, it's probably not going to do volume. So I usually take it off my screen.
Okay, perfect. All right. Any surprises here? We got about another 30, 45 seconds. But looking at this list, it seems like the majority of the group, I mean, when we take 39%, the other 20 and 20, I mean, we're talking 80% of the folks here wait until at least 3 months of data is available before they trade. It sounds like you're pretty excited to get in immediately on some of these IPOs if they set up appropriately.
Yeah, you have to understand that historically, 3 months is the worst time to get in because that's when traders start positioning short, anticipating the insider lockup after 6 months. Mm-hmm. So usually the sweet spot is if you get some consolidation the first week. And obviously, if it's a market like February 2018, you just back away. So I always try to consider market conditions, but definitely I wouldn't do it after 3 months, maybe after 6 months if the chart starts turning. And then the insiders have already dumped.
Awesome. Well, I normally, I like to have some history in the way I approach the market. So I would say for me, it's probably a minimum of 3 months, but I certainly can appreciate many of the points that you made today from an ultra short-term perspective, of course, and keeping stops in play, which is always important. Very, very enlightening presentation, though, Chris. Really appreciate you taking the time to come on and talk about IPOs. We really haven't focused on them that much during Market Watchers Live, and I know we get a number of questions. So, again, I just really want to thank you for stopping by and really appreciate your presentation today.
Yep. Thanks for having me on. And am I allowed to plug my site?
Yes, absolutely.
Of course.
Sure. It's brechertrading.com, and we have a free 10-day trial. Just go to brechertrading.com and try it out. It's our retention rate on trials. I mean, usually it's like 5% for people. Ours is 60 to 70% that try the trial, stay on. So that's pretty cool. So it's been going great.
Awesome. Again, everybody, that's brechertrading.com, BRECHER, brechertrading.com. Chris, it's been a pleasure. Thank you so much, and we'll have you on again soon.
Thanks for having me on. Take care.
Awesome job. Okay, well, it is time, Erin, to move into the 10 in 10.
Indeed, it is. I've been scurrying in the background, gathering all of the different requests, and here's the RRG. There you go. We had a lot of interesting ones here moving that northeast direction. I'll see what I can do about getting those in. And then as far as our sectors go, back to normal, in my opinion. Lots of consumer discretionary and technology, which do tend to always pretty much dominate our 10 in 10 requests. So let's go ahead and start with the first one, though. Overstock OSTK.
All right, the first one, I'll tell you, I'm just going to watch the support level. I don't like it because it's been trading lower, and it's in the specialty retail group, which up until the last couple of weeks has been pretty strong. So you've got a really poor relative performer. And this comes on the heels, by the way, of what appeared to be some pretty nice accumulation taking place. But we were never able to clear that relative high around 2250, double top, lost the support, and continued moving lower. I think this is a kind of a do or die right here. This is an area I'd be watching very, very closely. And if the low from about 4 or 5 days ago right here doesn't hold, I'd be out. So don't like the way it's been performing on a relative basis, so I would pass.
All righty. We had two that were the most popular, so we'll look at both of them, but let's start off with Canopy Growth, CGC.
All right, Canopy Growth holding on to price support, or gap support, I should say, so far. So really, I'm just going to focus in on this area right here. But after moving up, you can see, I think we've established now the resistance up at about 52.5, gap support 43-ish. And then if you wanted to look at that most recent low around 40, I think there are others in this space that are actually look a little bit better, but I would watch gap support around 43 bucks.
All righty, next one up. The other popular one is Zscaler, ZS.
Yeah, this has been a great stock, and I don't see anything wrong with it here. It's also in a great space, and it's one of your leaders. So this lines up beautifully with the types of stocks that I would want to be interested in and be trading anytime from left to right when I'm looking at these setups. This is exactly what I want to see. I want to see a stock that's not only performing well on an absolute basis, but it's part of a group that's been performing well on an absolute basis. And then when you get into these relative charts, they are actually moving higher as well. It just tells you a lot of money moving into the group and a lot of money moving into the stock within the group. I think this one looks really good. I like the breakout. I'd probably watch the rising 20-day moving average to the downside.
All right, sounds good. Next one up will be our only financial request, Broadridge Financial, BR.
Okay, it has been strengthening, and I like the relative strength building. Just keep in mind that relative to the financial administration stocks, it had been mired in a pretty big downtrend, and the reaction highs on the relative price chart here have not been taken out. And what I'm referring to there is here, right on this double top. So you see that relative strength build twice up to that level, and then we kept going lower. I think when we get up to there, that's going to be a really big test for the stock to see whether or not it truly is becoming one of the leaders in this space. But this is a great space. It's performing relatively well versus the S&P. So right now it's holding the 20-day. What would bother me is if we failed to hold the 20-day on the way back down, because again, remember that longer term relative strength has not been great. So just keep that in mind as you go forward, but so far so good on Broadridge.
Okay, next one up, let's see, PXD, and that is Pioneer Natural Resources.
Yeah, big gap up, came back down, failed to hold gap support. We're back below the 20, trying to get back up above the 50. This was a stock that was looking really good relative to its energy peers, but its energy peers, when you go back and you look relative to the S&P 500, are going down. So what I always say when I look at a chart like this, and I'll annotate, I always look for key support levels. And if a stock is in a bad group and it can't hold on to support, for me, I get out. And I think losing this gap support, especially with this heavy volume coming down here, I don't like it. If it gets back up above the 20-day because of its relative strength, maybe you could consider it. But I don't like the failure here, so I would pass.
All right, let's see. Next up in the toys area, Hasbro, HAS.
Yeah, I mentioned toys earlier, and this is one of your leaders. I know recently it's been struggling versus the toy group. Toys are bouncing back. But if we can get a breakout on the toys and we can start to see more relative strength in toys, I think Hasbro is one of the stocks you want to be looking for technically. So what I'd look for is maybe the last 3 months, you can see that's been a relative high. And if I talked earlier about this, but if we could get a breakout above about that 850 area, maybe even draw it a little higher. I mean, 860 would be even better, but I'm gonna say 850. We've had multiple tests around this 850 area. I think if we can get a breakout here, I really like that huge volume gap up. And the pullback was a little more than I would have liked. It went actually back below that support area and below the 20-day. But if the group breaks out, I think we're going to make another run for this high at 105. So Hasbro would be on my radar.
All right. Next one up is SBGI, and that is Sinclair.
Yeah, this has been a great performer. Huge move up off of this gap up at about 50, 50 and a half. That's going to be the major area of support. So I think everything looks good on this chart. It's just that the stock got very overbought. I don't want to jump in too soon. I think the top of gap support is going to be very strong support, and I think the rising 20-day right there is also something to watch. So I think as you get down to about 52 and a half, it starts to get interesting to me, and down to about 50 and a half, it gets very interesting. That area would be great, great area for accumulation, and to the upside, I think back into the low to mid 60s is a possible target here.
All righty. Let's go to comm services, Activision Blizzard, ATVI.
Yeah, this area has been very weak, very difficult. You can see the stock versus its peers, the stock versus the S&P 500 has been horrible. So some things have to happen. The first thing I'd have to see is at least a breakout above key resistance on an absolute basis. And we could talk about a couple of different areas. I think the big gap down on heavy volume, we have yet to even fill that gap all the way back up to about 50 and a half, 51. So I think that this one's got some more work. I mean, it might get to 50 or 51, but I think the overall trend here is just sideways off of a downtrend. So I'm not going to be overly excited about trading it on a momentum basis to the long side until we can begin to clear some overhead resistance. And that takes place for me around 51, 51 and a half. I'll wait.
All right, sounds good. Next one, career education, CECO.
Yeah, this one's been a great performer. It's pulling back, and the 20-day moving average has been solid. And again, when you look down at these relative charts, I think you're going to see that mostly we are seeing movement from the left side to the right side, meaning the money is moving into the group, and also this has been one of the better performers. But what I want to point out is that since we have made this huge move on heavy volume, we have seen that 20-day test. Here we came down just below intraday, held on to the price support level, and then we were right back above. But look at all these 20-day tests. If I can get these lined up just right. Here we got close. Here we tested. These 3 days we all tested. Look what we're doing today. We're testing again. And we've got gap support coming up right here at about 18. I think the current price down to 18 is not a bad place to enter. I think back to the upside, you might be able to get 6-7% back to the upside to test the overhead resistance. So I like SECO. I think this one looks pretty good.
All righty. And our last one is going to be, let's see, HSC.
Harsco. Yep. Breakout and gap support. So I'm going to say 24 and 25 are the areas that you want to be watching. The group is not great. I'll just tell you that right now. So when you go down here and you look at the group relative to the S&P 500, it has been downtrending for the last 2.5 months. That is a little bit of a problem, but the stock itself has been a good stock. So if you like the stock, I would just be careful and make sure your support holds. Good volume trends. The breakout at 25 should provide support. And then again, you've got the top of gap support at 24. The rising 20-day should. These are all areas that I would be interested in, but I'm not going to overpay for a stock that's in a group that's being shunned currently by Wall Street, at least on a relative basis. So I wouldn't buy the stock unless it was in this 24 to 25 zone, and I'd keep a tight stop because of the relative weakness in the group.
All right, that does conclude the 10 and 10. Here are the symbols that Tom just went over. They will be up in the Market Watchers Live chart list. Just go to the Articles tab, click on the Market Watchers Live blog, and the link will be right there at the top. All right, let's go ahead and get started with our final market update here. Before I do that, very quickly, go to stockcharts.com/special and learn more about ACP and the special we are running if you extend your subscription. All right, but here we are. Let's take a peek. Right now, as you can see, all of the major markets are up at this point. Looks like a pretty good day. Dow Jones is up a little over 100 points right now. S&P 500 is up 0.6%. NASDAQ also climbing, but it does look like a lot of these indexes seem to have found a little bit of overhead resistance with the top that we saw yesterday, at least as far as the Dow and the S&P. Also notice New York Stock Exchange, same thing going on. NASDAQ technology still holding up strong. We'll see if that can if we can move above that intraday high. Russell 2000 is almost unchanged. TSX up also. We're looking at Treasury yields down on the day, 2.377%. VIX is lower, reading 17.03, unchanged for the dollar, slightly up for GLD. USO is higher, forming a flag, could see higher prices from here, and TLT gap up, making that cup shape. We'll have to see if it can break out above the intraday highs that we already have. Sectors, comp sector clearly leading at 1.82%. Only negative is the financial sector, and that's all I have, Tom. Pass back to you.
Okay, one quick comment. We talked about IPOs. Chris did a great presentation earlier. I just thought I'd bring up a couple of the big ones that folks have been watching for the past month or two. One being Lyft, obviously a stock getting a little bit of a lift here early in the session, but after breaking down below this double bottom around 56, we went back up. We tested the 56 level, broke back down below this 53 area, and now we're at 53 trying to get through that. So it's been a constant stair-stepping down with Lyft ever since really the second day of trading here with that black candle. So we're still struggling here. The other one is Uber, which came out gap down on its second day, a pretty big gap down here, went all the way down to 36. It's worked its way and it has filled its gap to the upside, that 41.5 level. I think this is a level that I'd be watching pretty closely. A break back up above 41.50, I think would be at least short-term positive. But failure there now sends us maybe back down to test that 37, 36 area. So just wanted to update on a couple of those IPOs. Now we are going to move into our final segment, which is watch your stop. We have been in an extremely volatile market, and we always talk about keeping your stop in play. Chris earlier talking even about the IPOs, one of the things that he stressed is that you got to keep your stop in play. So what we're going to do, Erin and I are going to take a look at a few stocks where we always want to have our stop in play, but maybe there are some out there that if you own them, you really want to make sure you keep your stop in play because for one reason or another, we believe it's a key support level. So, Erin, why don't you start this segment off with your watch your stop stocks?
All righty. I really was trying to figure out how to go about finding some of these. So I have to say that some of them, they're kind of in a decline already. So hopefully you don't own them really necessarily, but some of them are bouncing right now off of some key support levels. And so I was going to show you a few of those. All right, the first one I wanted to look at is Alibaba. And as you can see, it hit that 200-day EMA, and it did manage to give you that bounce. I'm going to give you an annotation here so we can look at some of these support levels. So I'm looking straight back here, first of all. The top that we had back in November, December, matches up with the tops back here from September and just about lines up with the bottom here in August previously. It's now forming the bottom of what could be a bit of a trading range here. We got to pop out of there and then move back down. But I would watch my stop here because we did get that bounce, but price did end up below that 200-day EMA. The PMO is now just starting to turn negative. So if you have BABA, I would hold on to it. However, hopefully we'll see that PMO continue to decelerate and turn back to the upside. But certainly watch that level here where you have the top back in November, December. It might have scared out a few people when we dropped below this on Monday. But we managed to pop right back up. That's what Dr. Elder likes to say, when you get past some of these support levels, that could be the time to get back in. So you want to watch it very closely. But that could have scared some people out. Now it got to be more of a bargain, and we started to see prices moving back up. All right, let us look at, let's see. I had this one I thought was interesting, Cowen and Company. Hasn't been doing too much, granted. But, if you bought it and you're holding it and you're kind of in this zone, more of a sideways movement, let's take a look at a few of the attributes of this chart. So there is your short-term support. That's pretty obvious, right, at about 1550. Next level, of course, you come down here toward that 200-day EMA. It's going to land both pretty much at the same place if we come back down to test. That's the critical area. Notice it also lines up with the confirmation line for this double bottom. The double bottom executed. It even reached just above its upside target, and now it is coming back down. This is a very important support area to watch. Oops, I didn't want to do that. All right, the next one I think I'll go ahead and look at is Abercrombie. And I mean, like I said, I hope you're not holding it, but if you were looking at this on an intermediate term basis, let's look at that. Give you a better look. I can see why you might be holding on to it because you still do have there's still room to hit some support here, but I would look at that $22 level as kind of that drop dead. But notice that the PMO on the weekly chart is starting to turn down. So you really need to tighten up that stop. Maybe you had it lower at that 22 level because things were looking a little bit better after you bought and came back up through here. But now I think I would be looking to tighten that stop and start looking at this gap. I think that's going to be key. If you end up below that gap support level at about, 2375, that's a good spot for your stop, or just below it near that 200-day EMA. And again, I look at EMAs, so that level might be a little different for different people. But I think that, we are on that decline, but we need to watch this gap support level. And if you go back here, it also comes up to the gap we had down back here. It's trying to cover that back up. So that is going to be a pretty critical level of support to watch your stop. And then I think I'm going to just look at one more and pass it to you. And let's see, Beat was one. This is in a declining trend. You just got the long-term trend model sell signal. So again, if you came in here thinking you were going to get some support, maybe you got that PMO rising and you decided to give it a shot, but we're seeing it move down. The nice thing is we are getting a bounce right off of this low at 47.50. Exactly what you want to see, trying to get back over that 5-day EMA. The critical level here is certainly that level, which is very obvious, but let's go ahead and annotate just a little bit here and then pass it along. So there's that bottom back here in December. That would have probably been your best bet to get out. The next level, if you really wanted to stretch that out, would be that low. We haven't quite hit it. That's where I would be watching. PMO is turning back up. So despite this not being the best investment overall from the drop back here in February, I think that at this point we might be able to see a change of character and a move up, but watch that stop if you were going to hop in right now. And that's all I'm going to have. Tom, I'm going to pass it to you. What do you have? How did you look at these?
Well, I looked at them stock by stock, really. I mean, there are different reasons for different stocks. Some are, I'm worried because of the relative strength of the group that they're in. Some of them I'm worried just because of the actual absolute price action on their charts. Some of them, I'll look at Boeing in a little bit. Boeing was a leader of the market for quite some time. And here in 2019, it's become a laggard. And so you have to pay attention to that. I really believe that you want to try to avoid stocks when they make those characteristic or change of character type moves on their charts. And I think Boeing was an example of that, but I'll get into that in a minute. First, let's take a look at advanced auto parts. This is the first one. And I probably don't need to point too much of this out, but on a relative basis, you can see advanced auto parts versus its peers and versus the S&P 500 has now been downtrending for 6 months. So why is this critical? Well, we're at major price support. And when you look at, there was a gap, top of gap, recent lows, and then maybe the bottom of gap support. But this area, I'm going to say from 145 to about 153 is critical for this stock because it has been performing so poorly relative to the overall market and to its group. Its group, meanwhile, just recently set a new high in late April, early May. And look at what the stock was doing during that 2-week period when we had a double top printing in the group. It was already beginning to lose a lot of relative strength, and it has continued to do that. So this is one that when I look at it, I think you've got to, even though the overall chart doesn't look bad, nice uptrend, sideways consolidation, there's deterioration taking place underneath the surface in the group. And I know I was reading about some additional rumors swirling about maybe auto part tariffs, maybe possibly with Europe. And that might be what's, some of the fear that's driving a stock like Advanced Auto Parts, because that's when the market's turned down and it might be getting dragged into some of these tariff fears. But regardless of what the stories are, I would be watching this area. I think we're getting close to a really important range of support on AAP. Next up is, I believe, a healthcare stock. I'll continue to look at these relative charts. ABBV, it is a biotech. It's been downtrending. Of course, we know the biotechs relative to the S&P remained under a lot of relative pressure. And what I see, I'm not going to annotate it, but you've got equal lows and you've got lower highs coming down. So in a downtrend, a descending triangle pattern is very bearish. And so I would make sure I keep my stop in around 75.5, 76 on ABBV. I would not want to lose that level, especially with a big red candle with heavy volume. That would not be a good sign at all. ADS, this is a bear flag, down move, bounce back up, equal highs, couldn't get through, and now we're right back down at this support level. And again, look at, we're in the financial administration group. This stock is back at a December low. Look where the group has gone. So relative strength, there is none. This is a horrible performer in a very good part of the market. So this is the type of stock that if I own, first of all, I probably would never own it because of its weak relative strength. But there is nothing here to like. And if it doesn't hold its price support, I would want no part of this. AMG. And I started looking at a lot of the S&P 500 stocks at the beginning, which is why you're seeing all of these A stocks. But I do have some others. Just hang in there. Affiliated managers, though, group, that's in the asset manager group. Look at this horrible group. I would say over the last year, it's probably been one of the worst groups, if not the worst group. It's probably down there with some of the materials and energy areas of the market. But again, we've got a stock that's getting ready to break below its December low. Asset managers, as bad as they've been, are still well above the December low. So you've got a relative laggard in a just an awful area of the market. I don't want to close much below this area. It shouldn't have to be said, but AMG, watch your stop. BWA. This is Borg Warner. I'm just watching this one on a short-term basis. But again, we've been hit very hard here over the last few weeks. Volume initially picked up on this big red candle, lost the 20-day moving average, lost our breakout. In an uptrending overall market, that is a concern. And so the relative strength all pointing in the wrong direction. We're at a short-term support. We're trying to get a big reversal here, which is at least short-term bullish. I don't want to close back below 36. Alta, I've talked about Alta quite a bit of late, and I actually own the stock on the reversal at this gap support level. Nice hammer, the stock's rebounding, but I know personally for me, a close back below about 327, 328, and I would be out of the stock. It's been a great performer. It is in that specialty retail space. This one has been trying to break out to new relative highs. Excuse me. And that's with the overall group relative to the S&P coming down. If this continues, if specialty retail keeps dropping, I'd especially want to make sure that the top of this gap support holds. If it doesn't, I don't want to get caught in a group that's underperforming and just ride it down. So I want to make sure I watch my stop here. And let's see, maybe just a couple more real quick. HII. Huntington Ingalls Industry. Big gap down, heavy volume. We saw buyers come in just above 200. When I look at the relative strength here, very weak. The overall group, defense, beginning to pick up, but this has been a weak part of defense. So if defense is picking up and that's not helping this stock, I want to make sure I keep my stop in play. Watch that low from just a couple weeks ago, around 200. Humana. Healthcare providers have not been good. This chart is heading in the wrong direction, sloping down from left to right on all of these. So why is it important? Well, we're coming back down, possibly setting a double bottom. But if we were to close, we haven't had a daily close below about 233. I think if the volume picked up and closed below 230, I'd want to watch my stop here. Last one I have, this is more of a short-term stock. This is Illinois Toolworks. Notice the huge resistance coming across here, 145 to 147. We get the big breakout. We're in a nice group. This is the industrial machinery. I think for the most part, these relative charts look good, but I have two questions. One, where was the volume? Beautiful breakout. No volume whatsoever to confirm this move. Therefore, if we don't hold this breakout, I want to be careful because that shouldn't happen after a multi-month sideways consolidation. We should have been seeing volume coming in, and we didn't. Let's pull up our summary slide here on Watch Your Stop. Those are a number of the symbols that Erin and I just covered. And Erin, I think it's really important in a market like this that's volatile. If we start to see another push to the downside, I think it's really critical to make sure you keep your stops in play and don't ride it down.
Mm-hmm. Absolutely. I mean, some of those charts, like I said, I think a few of them, it was kind of like, probably should have gotten out of that one sooner. But if you still are in there, these are what you have to look for. You know, it's hard when we're looking at this market possibly bouncing here in the short term. Where do you want to be? Usually tech and all of that. But if it doesn't pan out, you need to be aware where to have that stop.
Yeah, and stops are relative. I mean, if you're a short-term trader, obviously you could be using a short-term moving average or short-term breakout, which gives us price support. If you're longer term, maybe it's the weekly charts, but it doesn't matter what you're using. Just make sure that it sets up with your strategy and that you do keep yourself protected to the downside. Mm-hmm. All right, here is your upcoming schedule. Lots of good stuff coming up, so you want to definitely be aware of that. I do want to thank all of you for being with us today. Please remember to complete the survey as you exit. Love to know what you thought of Chris's presentation on the IPOs. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. See you tomorrow. Happy trading.